Yes, good day. This is another beautiful day. I just want to start by thanking everybody for coming back to watch my discussions. It's very important that we have dialogue. People have to be able to opinionate their thinking, and this is my thinking. And I've seen what is going on in the global economy, especially being that I'm an African descent. Today, I want to discuss what I'm seeing going on, what I keep reading in the newspapers. What I'm seeing is that multinational companies are leaving Africa's biggest economy. Multinational companies, the biggest companies in the world, are leaving Nigeria, the country with the biggest economy in Africa, and of course, seems to be experiencing a decline in investors. There's a big problem of devaluation of the currency, which is the naira. And of course, this is leading to an exodus of investors. What I've also noticed is that interest rates are at an all-time high, and this hike is affecting markets in the country, therefore leading to high inflation. And of course, there's now a scarcity of dollars, leading these companies to leave because of the rising prices. And what I hear is there's reasons behind that, like unreliable electricity being one of them. So one of our problems is, of course, that African countries are single commodity economies. Meaning that in Nigeria, it's oil. They want the whole economy to be dependent on oil and oil products and petroleum. This is a problem for every African country, let me say every developing country. And a lot of countries are also facing these similar challenges, if not the same, or very close to that. We are seeing a lot of low consumer confidence in these areas, and especially Nigeria. Number one, I believe that the countries have to go back to the drawing board and develop correct policies that will work for these developing countries. So let me shed some light on this pressing issue that concerns not only Nigeria, but also a lot of African countries on the landscape. This exodus of multinational companies from Nigeria is not a good thing. Nigeria is often hailed as the largest economy in Africa. And if that country is experiencing a significant decline in investor confidence, prompting many multinational companies to reconsider their presence in the country, it spells doom for most other African countries that are in the same position whereby they're trying to develop. One of the most alarming indicators of this trend is the devaluation of their currency. The naira is weak. The weakening of naira not only erodes investor trust, but also creates uncertainty in the market, which means now there's too much volatility in the market. The market is up and down every day. You don't know what you're going to wake up to. This is making it increasingly challenging for these big companies to conduct any business. It's impossible to conduct business whereby operations are up and down. Today, what is there is not what's going to be there tomorrow. So this erodes a lot of confidence in these big companies. So the exodus of these companies has sent shockwaves throughout the economic sector. When you have companies like Procter and Gamble, Unilever, GSK, all of these companies are announcing the investments. And from what I read, this is totaling over $190 million lost in investment. This mass departure of multinational corporations signifies a loss of trust in the Nigerian economic stability and prospects for growth. So, my friend, economic stability. Nigeria has faced so much economic instability due to these fluctuating oil prices. And then currency devaluation and inadequate infrastructure, electricity, for example. This volatility can make it challenging for any company to work in that company, in that business. Number two, there's also some political uncertainty. Frequent changes in government policies, corruption, and political instability can create so much business uncertainty in the environment or in the business environment. Multinational companies often prefer stable political climates, and that will ensure long-term investment security. From what I hear is there's also security concerns. Nigeria has grappled with security challenges such as insurgency, there's terrorism in the oil-rich region, and violent crimes in certain regions, around the country, northern Nigeria, southern, southeast Nigeria. These security concerns not only endanger employees, it also endangers assets, but also disrupts business operations. So, my friends, these factors contribute to this alarming trend. Firstly, Nigerian economy has been plagued by high inflation rates. And of course, there's also now a scarcity of dollars. With scarcity of dollars, it's very difficult for business to maintain profitability and stability in their operations. The recent interest rate hikes have only exacerbated these challenges, making it even more difficult to do business and further dampening investor sentiment and shifting economic growth. Additionally, like I say, the unreliable electricity supply in Nigeria presents a major hurdle for the multinational corporations. The lack of consistent power not only increases operational cost, but also undermines productivity and hampers business growth. Now, infrastructure deficiency is a key factor in this country. Inadequate infrastructure, like I just mentioned, power supply. Transportation network, not to mention, is a challenge. And then we also have insufficient telecommunications. All these can impede business operations and can increase costs for multinational companies. To add on top of that is regulatory challenges, complex regulations, complex regulatory frameworks, bureaucratic red tape, and inconsistent endorsement of regulations within the environment. This can create barriers to entry and hinder business expansion for any multinational companies. So, my brothers, the challenge is there, solutions are there, government policies. Now, let me continue. Furthermore, Nigeria's heavy reliance on oil as a primary export commodity has rendered it vulnerability to fluctuations in the global oil prices. If you rely on one commodity, what happens globally affects you tremendously. This single commodity dependency exposes the economy to significant risk and limits its resilience against external shocks. If you rely on oil anyway, only, when the price goes up, the shocks within the economy is tremendous. So, currency fluctuations because of all these oil changes or prices or global oil prices. Nigeria's currency, the naira, has experienced significant fluctuations. Of course, against major currencies like the US dollar, the sterling pound. So exchange rate volatility can impact multinational companies' profitability, particularly those reliant on imports or exports. So we have to look for other forms of sources of making money. We cannot rely on one commodity because this leads to consumer confidence lowered. We get low consumer confidence. This makes the challenges faced by multinational companies operating in Nigeria even worse. So with rising prices and economic uncertainty, consumers are tightening their belts. And when they tighten their belts, this leads to a decline in purchasing power, and the demand for goods and services is reduced. So these challenges are big. A real policy change is what matters. Market saturation or limited growth opportunities. So in some cases, multinational companies may perceive limited growth opportunities or market saturation in Nigeria's economy, prompting them to relocate their operations. They relocate their resources, and this goes to other regions with a higher growth potential. So, my friends, in the height of these challenges, it is imperative for the Nigeria government to take decisive action and implement policies that promote economic stability. They need to attract investment from all over the world, and then they have to foster sustainable growth. Of course, they have to address the root cause of the currency devaluation. They have to address inflation. They must address electricity shortages, as well as diversify the economy away from its heavy reliance on oil. So, with all these problems, Nigeria's regulations often require multinational companies to comply with the local content laws, which may involve using local labor, local material, and or services. These requirements can add complexity and cost to operations. These multinational companies don't want just to be paying money. They want lower costs. Because if now everybody's unhappy, then there's social unrest. We've been seeing protests in the streets of Lagos and Abuja. We've seen protests and labor strikes around the country. All these can disrupt business. The operations of these big multinational companies come to a pause, and they have a risk of the safety of their employees and assets, prompting multinational companies to reconsider their presence in Nigeria. So the government must prioritize initiatives that restore investor confidence, let people feel safe, and create an enabling environment for businesses to thrive. This entails streamlining bureaucratic processes. They must tackle corruption, and they must provide incentives for foreign investment. If you don't do all that, this vicious cycle will continue. So let me conclude. The exodus of multinational companies from Nigeria underscores the urgent need for comprehensive reforms. The country must revitalize the economy and restore investor confidence. The time to act is now. With concerted efforts from both government and the private sector, it must be done. This collaboration, both the government and the private sector, are essential to steer Nigeria towards a path of sustainable growth and prosperity. So, in conclusion, again, government policies end corruption, tackle corruption, streamline bureaucratic processes, provide an incentive for foreign investment. With all the challenges I mentioned, if the government does not sit down and stop this currency devaluation, stop this economic instability, and all these regulatory challenges, work on these security concerns, work on infrastructure deficiencies, especially electricity, it will be difficult to hold these multinational companies in the country. Again, this is a big warning to other African or third world or developing countries. So a combination, social factors and the environment has to be changed. With those few remarks, I just want to thank you for taking time to listening to me. Thank you.